Bitcoin's no longer this, fringe speculative asset anymore. You're starting to see nations talk about it, including the nation with the reserve currency of the world, right? The United States is now talking actively about it. They're looking at adopting this digital capital for themselves to strengthen the country.
MicroStrategy is like a vacuum, just sucking up all fiat liquidity and refining that dirty cash into Bitcoin. That sounds like an extremely profitable business model.
MicroStrategy having to be the leader, really the first company to take this step to say, what if we pivot some of our focus away from what our core business model has been? What if we could take our model and we could apply leverage to our business to acquire more Bitcoin in excess of what we could get just purchasing our cash? And what if we could engineer enhanced volatility? So I think 2025 is really going to be the year where we see this accelerate.
Hey there, I want to ask you for a quick favor. Over the past few months, I've had over 50,000 returning viewers and listeners to this podcast, but over 65% of you haven't subscribed yet. So if you enjoy what I'm doing and you find my content valuable, please subscribe on YouTube or follow me on your favorite podcasting platform. This will help me fuel the algorithm and spread the message on Bitcoin even further. I really appreciate your support. Now let's dive into this episode. All right, Ben Werkman, welcome to Bitcoin for Millennials.
I appreciate it, Bram. I'm glad we're able to make this happen. I know we had some struggles here along the way getting this scheduled, but I'm glad we're finally here. We made it.
Yeah, we made it. Well, you had a good excuse. You went to Michael Saylor's 100K Bitcoin New Year's party. So, okay, I'll forgive you. But yeah, man, I'm super excited to chat. And yeah, I was thinking like the goal of this conversation, I was thinking, let's just take people along, the incredible, interesting development of Bitcoin as a corporate treasury asset as, kind of started with MicroStrategy and what to look out for in 2025. And if you're up for it, let's dive into that.
Absolutely, man. Let's dive in.
Awesome. Well, first off, I want to thank you for helping, MicroStrategy pill myself, just like orange pilling. People do that to themselves, but you have been a huge guide and help for me. And especially when I heard you on a podcast talk, of course, about MicroStrategy, their Bitcoin strategy, and you mentioned, this is a business model pivot. And when you said that, that really clicked for me because the story of MicroStrategy, and we'll dive into that further, is kind of, it's kind of like gradually, then suddenly he's improving on his understanding and improving on his offerings, etc. But when you said, business model pivot, I understood, okay, he's taking a company that he was basically, at the end of, he was like thinking of quitting or, selling or whatever. He had his problems. And now it feels like he found a renewed possible future for this company. And that made me realize this is not just a software company that's buying Bitcoin as a treasury asset. Like, he is starting on a path to actually become something way, way bigger. And I shared with you a tweet that I wrote to check, do I understand what he's doing? And I'll read that, and then let's dive into that. I tweeted, so MicroStrategy is like a vacuum, just sucking up all fiat liquidity and refining that dirty cash into Bitcoin. That sounds like an extremely profitable business model. And you replied to me, you got it. Is that a good summary, or can we expand a little bit on that?
It's a great summary, right? I mean, this really is a pretty monumental shift for a corporation to go through. And it's a tough one to make the decision to do, right? MicroStrategy having to be the leader, really the first company to take this step into not only converting into a Bitcoin treasury as a treasury reserve asset, but they went the extra step to say, what if we pivot some of our focus away from what our core business model has been, which is business intelligence software products. And instead, we look at how do we manufacture a universally appealing asset for all investor types, right? How do we become, I'll call it a leveraged Bitcoin equity? That term's been growing in popularity. I really like it because I think it actually sums it up quite well. You're making your equity the product for the market. And that's a tough shift for people to make mentally when they look at a company, because traditionally, you're always looking back to, well, what are the core operations of the business? And with MicroStrategy, when they go back and they look, they go, well, yeah, they've got a software business, And for years and years and years, it's been a good cash flowing company, but the growth was gone. And for equities, typically what that means is your equity value, your multiple that you're going to get, starts to compress significantly. The market rewards growth, and they want growth at the expense of anything else. And it's what makes a lot of corporations very short-sighted in nature, because they're always focusing on the next quarter's earnings, right? You've got to show revenue growth. You've got to show margin growth. You've got to show bottom line growth, right? That's always been the focus traditionally. But Bitcoin didn't exist in the past. So this is a relatively new development here, right? I mean, we think in terms of something being around for 15 years as being a very long time, but the reality is that's a very short lifespan for an asset. So to see a company look at this emerging asset and go, this has qualities that are valuable to the capital markets. And that quality is that it's in this adoption period where volatility is very high, right? Bitcoin was a 60 volatility asset. Most equities in the United States would fall into like the 15 to 20 volatility. So it's significantly more volatile than traditional equities are. And what MicroStrategy did was they looked at that and said, volatility is what generates returns for institutional capital. They need to be able to trade. They need an asset that moves around a lot. But they can't get access to Bitcoin directly. And even if they can, what if we could take our model and we could apply leverage to our business to acquire more Bitcoin in excess of what we could get just purchasing our cash? And what if we could engineer enhanced volatility for our equity? Well, if you can do that, you're creating a really great product for all kinds of traders, right? I mean, we're talking retail traders love this because it's moving constantly. You can leverage way up if you want to using the options of this company. If you hate Bitcoin, you can short the company, you can buy puts on the company. But now we're seeing it trickle down, right? It's good that the equity moves, but it also opens new doors for MicroStrategy that other companies don't have opened for them. And that is access to raising capital using the volatility that they generate. And they're looking at that volatility profile and going, how do we build a volatility profile for all the different types of customers that want exposure to this type of performance? And you're seeing them do that with all these new products that they're offering. Obviously, the main one that we've seen so far is convertible debt, right? The convertible bonds that they've been issuing out to the market. And what those convertible bonds are a slightly step down in volatility product that they can offer to a pool of captive capital that cannot otherwise come into Bitcoin. And that's an important point in that those types of institutions that are starved for returns couldn't get access to one of these assets that can generate the type of volatility they need for their gamma trading strategies, which we've talked about quite a bit now. I think a lot of people got kind of an education in convertible bond and convertible arbitrageurs that they never thought they were going to get unless you're following MicroStrategy. But they created a product that's tailor-made for that pool of capital, right? So they're giving them volatility that's going to be way larger than what they're going to get if they go buy convertible bonds out of any traditional equity, right? If Alibaba issues convertible bonds, the bonds aren't going to move very often because the equity doesn't move very often. And in convertible bonds, that bond has that conversion. It's a call option on MicroStrategy embedded within it. So as the price moves drastically on MicroStrategy, and particularly when that price starts to climb, it starts to act more like equity, right? Those returns on the bonds themselves start to move, and these gamma traders are capturing that movement. It's really as simple as thinking about it as sell high, right? They'll short the stock when the price runs way up, and then they'll buy it back cheaper. When it comes down and the delta comes down, they'll buy back those short positions. So throughout the length of holding that bond, they're constantly trading, and that's what generates returns for them. And it made these products really important to that market because not only did these perform really well, they outperformed Bitcoin itself, which is massive, right? I mean, that's a huge undertaking for a bond to outperform an asset like MicroStrategy or like Bitcoin. So it was pretty shocking to the market over the last 12 months to see that type of performance ramp up. And it hasn't always been the case, right? We've now gotten conditioned to think that that performance is just what it's always been. But we got to remember that a lot of these bonds, like the 2027 bonds, were issued back in 2021, and they only recently became convertible. So they had a long period where they were sitting on 0% coupon payments. They were getting no returns on the capital back to them. And the stock really wasn't moving all that much. But then this last year, when we saw MicroStrategy really ratchet up that leverage, we started to see the performance really show up here. And that's been just, I think, mind-blowing for a lot of people. That's causing both other corporations, it's causing retail investors to kind of reevaluate how they see these companies that are introducing Bitcoin into their ecosystem.
Bitcoin custody is evolving, and while self-custody is important, it has its own risks and trade-offs. OnRamp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your custody setup. OnRamp secures your Bitcoin in a segregated cold storage multi-signature vault, guarded by 3 independent institutional-grade custodians, none of which have unilateral control. Your funds are fully auditable on-chain, cannot be rehypothecated, and can only move or withdrawn at your explicit direction. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. Bitcoin is money, and as the price continues to appreciate, OnRamp helps you seamlessly tap into financial services like trading, inheritance, insurance, loans, IRAs, and more, all without compromising on security or accessibility. Check out onrampbitcoin.com through the link below and schedule a consultation with the OnRamp team to get to know them and learn more about their offering.
And that's become a very monumental shift that we're seeing broadly in the market as new entrants are emerging and looking at, one, how do we acquire Bitcoin just for our treasury, just to protect the value we have in our organization? But two, there's going to be a few more players that really emerge and say, we've got some unique characteristics here, and we're going to take the strength of our core business and we're going to start taking that to really ramp up this leveraged Bitcoin equity play. So we're not done seeing the evolution here yet, and we're not done seeing companies enter this market. It's really, I think you had a lot of them waiting until FASB really came into effect and the accounting settles down. It becomes much more black and white on the accounting than it was when they had the indefinite intangibles. And so now it's a much more easy strategy to implement for companies. So I think 2025 is really going to be the year where we see this accelerate.
Yeah. What I find interesting is that just as with Bitcoin, it's hard to understand Bitcoin if you look at it from a traditional perspective, right? And I think how you just explain it, it's the same with this. But there was one thing that you said that piqued my interest because, Saylor kind of went from necessity to conviction to, hey, I see this opportunity, to this business model pivot that you mentioned, to now like relentless execution. Like he's been buying Bitcoin for the past eight weeks on every Monday, I think. So he found like a new way to like rejuvenate his company basically. And I think the business model pivot now, so offering all these diverse financial products basically that fit the TradFi world in order to, just find capital to eventually buy Bitcoin. I feel like that's like a temporary part of the pivot to eventually move on to something bigger that we'll talk about. But it's interesting to see that like he rejuvenated his company. And when you mention about like other companies adopting it, it doesn't necessarily mean that only companies that are in the same stage as MicroStrategy would do this. Like they could do that to rejuvenate the company, but just companies that are operating in a way better way could actually strengthen just their own position by the money that they make, right? To, I'd say, just survive towards the future, just strengthen their own position. Does that make sense?
It does, yeah. When I look at these companies, you kind of see them in a couple different categories, right? First, you're going to have the really cautious entrants that come in, and really what they're looking at is they understand the weakness that holding fiat currency does to eroding the value of their business, right? So you'll get people that dip the toe in just by converting cash reserves into Bitcoin. And that's great. And that should be celebrated as well, because it is a big shift for these companies to undertake. But what I think is really going to be transformative about this And I agree with you that I think this is phase one of an evolving strategy over time, right? You get rewarded for being early to something like this. And what I view this as is this is really transforming the future capitalization of organizations. So if you look at what MicroStrategy's doing, they're accumulating all this digital capital, right? They're bringing it inside. They're using whatever tools are at their disposal, whether it's equity, whether it's fixed income products, right? They're using all the tools at their disposal to accelerate their accumulation of digital capital. And we're in this adoption period where Bitcoin's no longer this, fringe speculative asset anymore. You're starting to see nations talk about it, including the nation with the reserve currency of the world, right? The United States is now talking actively about it, and we've got people in positions now to really influence the decisions where they're looking at adopting this digital capital for themselves to strengthen the country. So if you're a forward-looking leader, like Saylor's proven to be, right? Willing to pivot, which is not easy to do, right? When you build a company and you're the founder of that company, it's very easy to get married to the initial mission that you set out. It's very hard to break from that and admit to yourself that maybe this isn't working anymore, right? Maybe this isn't what's going to drive value for our shareholders anymore, and we might need to look at a drastic transformation here. What happens for most people in that position is they just basically start issuing capital back to shareholders through dividends or whatever. And it's basically an admission that we're out of ideas. So we're just going to keep running a good business that generates cash flow, but we're just going to give it back to the shareholders for as long as we can. So you're no longer holding those entities, people call them value, right? When you're paying those dividends, they call them value stocks, but you're giving up kind of any of the excitement around growth. The growth is gone, and you're really just riding a business that's been good for a long time, and you're just going to issue out all the capital back to the shareholders, and you're not going to hoard it. Well, now, instead of going out and generating growth on your own, a lot of these companies have the opportunities to basically bring in an asset that brings growth to you, right? You can benefit from the growth of just the asset alone without you having to really do all that much in your business model. So you're going to get some of these organizations that look at making that transformation and saying, not only do we need to get Bitcoin on our balance sheet to preserve value, to capitalize on the 60% growth that Bitcoin's having year over year, but we want to get as much of it as we possibly can. Because what it can do is it can give your company a second shot at life, right? It gives you time to capitalize your business that you're going to be able to use in the future, right? I think if anyone thinks that you're not going to be able to use Bitcoin to borrow against as a corporation here over the next 10 years, I think you're out of your mind. It's definitely going to be there. So if you're capitalizing your company, you may exit in the next 5 to 10 years in a position of really enhanced strength beyond what you could have on your own. And that enhanced strength brings opportunity, right? That brings opportunity to reinvent yourself down the line and capitalize on whatever the emerging product is that you need to bring out to the market that the market's demanding. If you just continue to sit and erode value over the next 5 to 10 years, you're going to cease to exist over time. And I think a lot of business leaders are going to really be faced with that reality as they watch some of these companies that were willing to take a risk, and it's less risky now than it was 5 years ago, right? I mean, people are starting to acknowledge that a little bit, but you still hear the sound bites out there about, how risky Bitcoin is as an asset, but it's significantly less risky than it was 5 years ago, right? The adoption has turned. We finally got tailwinds. It's reaching its escape velocity point. So if you're one of these forward-looking leaders now, you're looking at an opportunity to change the standing of your company in relation to all your competitors. If you're in a small industry that's all competing with each other, and you've got 5 companies, 5 core competitors that you're competing with, and you continue running your business, and it's a good business, but it's not a great business, but the only difference between you and your competitors is that you converted all the value you created into Bitcoin, which is holding its value over time. Or maybe you went a step further and you said, we're going to take our business, which is strong, throws off good cash flows for us. We're going to leverage the tools that brings to our business to go out and actively acquire Bitcoin, however we can, right? Within a defined risk parameter. That's very important because a lot of people view this strategy as risky when you use leverage to acquire Bitcoin. But if you do that over time, you exit that 5 to 10 year period with significantly more value on your balance sheet than all of your competitors, right? That could put some companies in a position where you ultimately end up owning your sector because you could buy your competitors at that point. Yeah. So it's a transformational step that a lot of these companies are going to have to take. And for other companies, when that starts happening, if one of your competitors announces this type of change, you better be on your toes. Because if you don't start looking at protecting yourself from that type of threat, right? That's a threat to your business. You now probably need to look at a minimum, bringing Bitcoin onto your balance sheet through the conversion of cash just to maintain your standing relative to your peers. So I think that journey for a lot of companies now, as they're watching this evolve, is going to really push corporate strategy for the next decade. I think that you're going to get into this digital capital, I'll call it a digital capital arms race, where you're trying to recapitalize your company into the next layer of innovation that we're going to see. And you're going to try to position yourself to be in the best position for strength, growth, and innovation that you can be in over the next 5 to 10 years. And I think that's going to be very important to corporate and corporate finance and how all of these finance professionals that are managing the capital of these businesses are going to have to change their thinking and at least evaluate those outcomes and whether or not they need to be positioned accordingly.
Yeah. I was looking so forward to this conversation because it gives me so much ideas. Like what you just said makes me think of it is going to become a competitive advantage, because also I love also, by the way, the thinking around the dividend, right? So a lot of people are in the stock market and they're like, oh, I'm getting dividend, right? And it's also used as an argument a lot. Well, at least stocks pay dividend. But when I hear you say like, no, that's actually a bad thing because you want to reinvest in the business. Eventually you want to grow, you want to create more value of the company, which eventually gives you more leverage to borrow, to then invest, to create more value, etc. Right? Like it's a flywheel. So if you start basically giving back the dividend, as you said, there's no room for you to grow. Or you're giving away that capital that you could use to grow, to eventually increase the stock market value. I love that thinking. I think that's very contrary as to how people just generally invest. But with that part of like the competitive advantage, eventually it's the same as with individuals that adopt Bitcoin. You know, I generally say like it lowers your uncertainty towards the future, so you can become a builder instead of a consumer. I think it's the same for a company, right? Like you want to have a certain mechanism or a tool that creates maybe a prolonged runway or, you know, something like that for your company, so you can actually try stuff and actually try to innovate to see if you can reinvent yourself or become better or more valuable or whatever, which eventually is the goal of most companies, because in a free market there's always competition in a sense, so you could always be threatened by new entrants, you know, unless you really have a monopoly. And it also makes me think about, I'm going to talk with him again, but I had him on before. Leon Wankum is really into like real estate and Bitcoin. He does real estate development, and they basically, when they have a project, they borrow, like that's a 10 million euro project. They borrow 12 million, they buy 2 million of Bitcoin for that entity of the project. And you know, those are 5+ years project, like, you know, building homes or whatever. And in that way, they kind of like secure the future of that project. And I think it's a similar approach here. So very interesting that you explain it like that, because it makes so much sense. It's the same as with individuals. Once your competitors adopt it, like you have to do that too, because you know they are more protected towards the future and will have more capital, especially if they are able to create that leverage and perhaps also borrow more, and they are able to invest more.
There's even the more foundational shift in thinking that a lot of people have, right? I mean, people always talk about the risk-free rate of capital, right? And what they're talking about are things like treasury bills or treasury bonds. And it's interesting when you're tying your risk-free rate of return to something that's not even outperforming monetary debasement, right? Really what you end up doing in that arrangement is you accept the certainty of loss.
Yes.
Which is something you would never do, right? I'm never going to give you $5 if you give me $4 back, right?
Which
That's
is increased.
It's not an arrangement I'm going to sign up for with you.
Yeah, but it's increased future uncertainty that you also adopt, right?
Correct. And so it's almost strange to me how conditioned we've become to accept that as stability, right? We've accepted stability as the certain erosion of the value we've created in the world, right? Through our efforts in time. And time is our most finite resource we have, right? I know it's almost cliche to say it, but you're spending a drastic amount of your life trying to bring this, value into your life, right? Through collection of money and assets. That makes up, say you work from 20 to 60, right? That's 40 years of your life that you've spent trying to generate value that's going to carry you for the rest of your life. Well, if you're fighting into headwinds the whole way through there, because all you're conditioned to do is, you used to hear about people, many decades ago that used to, put their money in the mattress, right? They would take cash and they would squirrel it away and save it somewhere, for safekeeping. And people used to think that that was a great idea. Just hold your cash, but keep it with you, right? Don't let it be in the banks, right? The Great Depression taught people that was a bad idea. Maybe you shouldn't do that. So they're really holding things in physical cash. And that was back during a time where monetary debasement wasn't as rapid as it is today. You have to evolve your thinking now because they've given you all the evidence you need to see to show that they don't have control over this, right? They've lost control. When our GDP in the US is, our debt's 130% of GDP, which is astounding, right? That we're getting there. That starts to reach an escape velocity where you can't put that genie back in the bottle, right? You've borrowed a huge amount of value from your future for today, and you're not generating any growth on the other side of that equation that's going to support that debt that you're taking on.
Yes.
And that ultimately is going to mean debasement of your money.
In real terms also, right?
In real
terms. It's been nominal,
Absolutely.
It's been nominal, but it's going to be real.
It's going to be real, and it's going to be very real. Anybody, they play games with all the numbers that come out, right? When they talk about inflation, right? All the inflation numbers that you hear reported to you, they basically say, here's inflation, except we exclude all the things you need to live your life, right? Things like food and all these other categories, right? As long as you don't need food and utilities to live, here's what inflation was. Well, your whole life revolves around the areas that they exclude from the measurement. So you're not even getting an accurate accounting of the value you're losing in your day-to-day life as it goes. And so the thing that a lot of Bitcoiners really turn the corner on is they go, I'm spending an exorbitant amount of my life, my efforts, and my thoughts into creating value for the world through one way or another, right? Whether you work for a corporation and you're just trying to really provide the best value to that corporation that you can provide, and they're rewarding you with a payment in one value that's coming in fiat currency. Bitcoiners turn the corner a lot faster to go, well, what they're rewarding me with has limitations, big limitations. And that limitation is if this is what I decide to pin the value of my life to, I'm going to be in this constant battle against the debasement of that asset. And that trickles into a lot of other assets, right? We all think that some assets are very stable in the returns that they provide, but people forget that a lot of the times those returns are generated by the loss of value of the denominator of that equation, right? If you're denominating it in the US dollar and the US dollar continues to devalue, it looks like the value of that asset's going up. So people drastically are looking for what asset can I introduce to my life where I can actually lock that value up for the future, right? I want to make sure that my future standard of living is absolutely no worse than it is today, and hopefully much better than it is, right? You're trying to create future value for yourself by getting rid of all the entities that are playing games with the currency you were initially conditioned to believe the value of your life was going to be reflected in. So getting away from the fiat currencies and going to something that for the first time that's gaining adoption with no interaction from the central banks or anyone actively managing it, right? We know the rules to Bitcoin. And because it's a finite asset with unlimited demand into the future, you can be pretty certain about the trajectory of Bitcoin, right? We can count on everything we know about Bitcoin remaining, which is beautiful. And it's that foundational shift that once you turn that corner and you start transitioning your savings over to Bitcoin,
Yes.
you start to almost panic because you don't feel like you have enough, right?
Yes.
And you see what's happening in the world around you and you go, the value I've created and I've worked so hard to create and dedicated so much of my time to creating is disappearing through no fault of my own, right? Just through mismanagement of programs in the country that I live in or whatever the case is, they're debasing it to get rid of their debt problem. And I'm the recipient of the outcome of it. And anyone going into a grocery store knows the impact of what that looks like right now. It's getting bad. And people are starting, I think that's what's starting to push so many people to explore alternative options here. And a lot of them are arriving to Bitcoin, and you love to see that.
Quick question. If you have your Bitcoin in self-custody, where are you keeping your Bitcoin seed words? For me, there's only one way, and it's backing up my seed phrase with stamp seed. It's a single durable plate without any parts or materials. Stamp your words into solid titanium, which is fire-resistant, water-resistant, and built to last. Unlike etching or engraving, stamp seed's patented tools help you to deeply stamp every letter for permanent readability, making it easy for you to protect your generational wealth. Don't risk losing your seed phrase on paper. Get a stamp seed plate for unmatched protection. You can use code BRAM, that's BRAM, for 15% off at stampseed.com.
I think you explained it perfectly. I think we're talking basically about saving, right? Just like spending your time and energy now, getting a reward. I don't want to spend it now. I just want to save it towards the future. So I have something I can use to do whatever with, whatever you want to create in the future or protect in the future. But I think
I was going to say, the point that I'd make is that that same equation applies to corporations.
Yes.
Right? They're not immune from this.
No.
And the way that I like to often describe MicroStrategy to people so that they can kind of conceptualize it from their own life is you've got an income statement for your personal life. You've got a balance sheet for your personal life, right? Think of your income statement as your salary, right? Then you've got all your living expenses, and the remainder would be your net income, right? What you're doing when you shift over to what MicroStrategy is doing is they're saying, well, instead of us fighting for this, 5% raise a year, right, in our income, instead of deploying all of our efforts there, we've accumulated assets on the other side on the balance sheet side. What we're going to do is we're going to be smart about how we deploy those assets. And if we get 5% return on a bigger pool of capital, that's a more impactful outcome than getting a 5% raise on your salary, right? That's part of the reason why people need to save for retirement, right? Is because as you build that capital base, the interest that the returns that you're getting year over year start to become more material than the income you're getting from your job. Now, MicroStrategy, that's essentially what they did. They shifted from saying, let's focus on the income side to how do we better deploy our balance sheet? We have a very strong balance sheet. We're unencumbered by debt, right? We've got a lot of flexibility. They've got a few things that you don't have in your personal life, which is access to the capital markets in this way that you're seeing them deploy with all the different products they can issue. But foundationally, that's the change that they made. They said, we've spent decades building the value in our balance sheet. Now let's take that strong balance sheet and let's utilize that to generate bigger returns for our shareholders than we can by focusing on our BI business, right? The growth just isn't there. They've got significant numbers of competitors on that side. But in what they deployed on the balance sheet, they didn't have that many competitors. So they got a huge head start, and other corporations are going to start playing catch up. But it's a very simple shift in thinking, but it's not one that you traditionally see in corporate finance because the value of companies has always traditionally been tied to the outcomes of the income statement. So that's the foundational shift that they made that sets them apart. It's also what makes them very difficult for people to value because they'll value the returns that they see on the income statement and the growth. They're having a very hard time wrestling with the returns that are coming from the activities actively utilizing your balance sheet. So it's kind of throwing people off from the traditional metrics they like to rely on.
Yeah. That's a perfect bridge to the next part I wanted to talk about because MicroStrategy introduced a new metric, Bitcoin per share. And yeah, it's really hard to compare that to traditional, financial metrics, as you mentioned. What implications does this have for valuing the company? And maybe also take into account that what you mentioned before, the FASB, so that's the Financial Accounting Standards Board, which basically creates like the rules for accounting in the United States. There are changes there so that, and they've come into effect, but they haven't really reported with these new changes, right? So they can report on Bitcoin's fair value, so the fair value of their holdings, instead of, you mentioned that before, it was kind of like an intangible asset before, kind of like a patent or something I once heard. So that's, of course, totally different than what Bitcoin is. That is coming into effect. I think it's Q1 where they can really report on the earnings in Bitcoin per share denominated in dollars or accounted for in dollars with the fair value of Bitcoin.
Yeah, so for FASB, so some companies have adopted it already, which is great, right? Companies like Semler, Marathon, right? A bunch of those have adopted FASB already. The change really is, in the past, MicroStrategy's only been able to realize losses on their Bitcoin holdings. So if the value went down, they were forced to mark down the value of the Bitcoin on their balance sheet. And that caused a huge number of issues, right? One, when people like to use automatic data sources out there to get ratios, like leverage ratios. That was part of what started to drive the risky leverage narrative, because the balance sheet never accounted for the fair market value of the Bitcoin. It was always this marked down value of it. So it made them look far more leveraged than they actually were. What's changing now is that at the end of 2024, they're going to mark their Bitcoin up to fair market value, right? So starting Q1 2025, the balance sheet is going to reflect the fair market value of their Bitcoin as of the end of 2024. From that point forward, any appreciation in that Bitcoin is going to show up in the net income on the income statement. So it's going to show up in those earnings. And when you accumulate the amount of Bitcoin that MicroStrategy has, it doesn't need to move very much for that to be a really drastically large number. And it's going to shock a lot of people, because you're talking potentially billions and billions of dollars of earnings every quarter if Bitcoin performs. Now, it goes the other way too, right? Now you're going to start seeing those losses going into the net income as well, which you saw some of that with the indefinite intangible accounting, but not the full amount, because traditionally it was marked down already partially. But it's going to go both directions. And so that's going to introduce probably more volatility into the equity as people work to digest what that means. But now you're going to see the impact of this accumulation strategy. And if Bitcoin follows pretty much any of the estimates that you're seeing come out from people, whether you're in the camp that believes it's going to be 175,000 by the end of the year, or I think Max Kaiser said 2.2 million or something, right? Like really high. So whatever that number is, right, it could be very impactful to that income statement. And that's going to bring a lot of eyeballs to the strategy now that they're going to see the outcome of what they've accumulated and the creation of the value of what they've accumulated showing up in those income statements. So that's going to be a big deal for MicroStrategy. So you've got a lot of guys out there that are now tracking day to day what that gain is going to look like for Q1. But the first time we're really going to see it, it's going to be the value as of March 31st. But it's probably going to come out on their earnings at the end of April, is probably my guess for when we'll see the first Q1 earnings. So, but it's important because those earnings will flow into the criteria for getting into the S&P 500. So for the S&P 500, you have to have a cumulative 4 quarters of positive earnings. Well, with the indefinite intangibles that they've just had huge losses for several quarters in a row. And now all it's probably going to take is one $2,000 move in Bitcoin to wipe out all those negative earnings and put them into positive, which now at least gets them in the conversation. There's no guarantees that they get entry into the S&P 500, right? That one's a little more political than the NASDAQ 100 was, which they just got into, which was a really big deal. But it's a really big deal to get into the S&P 500 because of the amount of capital, the amount of passive capital that comes into your equity when you get in there. So it might take them a couple tries. People are going to have to digest, how do they evaluate MicroStrategy from the index lens for the S&P 500? That committee will have to decide on that. But it at least opens that door for them to meet the last criteria that they need to meet to be able to be in the inclusion for that. So that's going to be a really cool change that comes out of this fair value accounting, because now the Bitcoin isn't treated, as hostily as it was before, because you're going to start to see those returns trickling through. So that's a big deal. And it's a big deal for other corporations as they're adopting it as well.
Do you think that will happen this year, the S&P 500 inclusion, or is that hard to predict?
I'm hopeful it will. I try to remain fairly measured in when I think these things are going to happen. So I think that the first chance, which comes this summer, I'm not expecting it then. I think that it's going to take a little deliberation to gain consensus on how they're going to treat MicroStrategy. I wouldn't be surprised to see it by the end of 2025, though, right? They'll get 2 more shots here in 2025 to get in there. So I won't be surprised to see them get in, right? I think they should be in. And I think that when you look at those indexes and they're looking at the types of returns and the adoption that this type of a strategy is getting, it's going to force them to consider their criteria and how this is going to factor in, because they may have to answer this question for several other organizations. MicroStrategy is the first one reaching enough scale to get consideration, but there'll probably be others coming. So they're going to have to come up with a more standardized approach.
So these passive inflows, I read someone's calculation once that it could be like around $1 billion a month. Well, it depends on their spot and the weight, of course. But let's take just, the number doesn't really matter, but it's more about, so these passive inflows basically buy the stock, right? So that gives them money to buy more Bitcoin and just to add to the flywheel, right? So that's the whole idea of getting.
It does, yeah. It's one of these impact factors that are going to impact things like the multiple to net asset value that you see talked about a lot, right? So one of the questions that you'd asked me before that I think I missed was around kind of their key metric that they report, right? Which is Bitcoin yield. And Bitcoin yield is essentially the change of Bitcoin per share quarter over quarter.
Yeah.
So,
which you could then call earnings per share, basically, right?
Yeah. Except for the earnings are cumulative based on all the Bitcoin that they hold.
Yes,
and the change in value there, right?
Yes.
So bigger pool, actually. But what's really interesting about Bitcoin per share, and the reason why it's important, is you can think of it as essentially continuing to create an increasing intrinsic value floor for the equity, right? So MicroStrategy is becoming unique because the derivatives market is becoming so huge, right? The options market, I think the last time I checked, was as large as the market cap of the company, if not larger now. And when you've got a derivatives market that's that large, that starts to impact the equity performance, because you've got this constant settling of all these options contracts, and that creates a huge amount of volume in your equity. And what happens is you get these shifts, right? And where those are going to push your equity valuation, right? You've got things called gamma, right? And you're going to get dealers that are hedging their positions. And so as sentiment changes on Bitcoin, people are going to take different bets in the derivatives market, and that can force these dealers to hedge in different ways, which can put a lot of buying or selling pressure on your equity, right? So it starts to create these really outsized moves in the equity, which is what creates the volatility. And so Bitcoin per share, I view it as foundational to the high sides of the stock price and building a higher floor to the stock price when the sentiment changes. So I've always viewed multiple to net asset value as kind of a combination of sentiment of the market in terms of how they're thinking about Bitcoin in the future. And it expands and contracts depending on how people or how institutions are viewing Bitcoin's prospects over the next certain period of time. So when they're building Bitcoin per share, you can think of that essentially as building this intrinsic value floor behind each of the shares. So for instance, right now, I think that value floor is right around $150 a share. That's tied to the core value, the Bitcoin per share times the Bitcoin price, right?
Yeah.
Which tells you each share on a fully diluted basis is about $150 in intrinsic value. Well, if you just assume that the multiple to net asset value is going to expand and contract within a range, right? Say you thought the high end was going to be 3 and the low end is going to be 1.5, right? The higher you get that intrinsic value, the more impactful a 3 times net asset value multiple becomes, right? If you go 3 times from $100, right, that's going to get you up to $300. If you go 3 times from $200, that gets you up to $600, right? So as that floor builds, it builds the higher end of the range for the stock price. And this thing's going to be volatile. It's the whole design, right? But you're going to get these periods of time where that valuation expands as market sentiment changes and traders start to place their bets. And that starts pushing the hedging activity. So there's a lot of buying activity in the equity, which can push the price higher. And then when that sentiment shifts, right, gamma goes the other direction as well. And it brings you closer, but now you've got a higher floor for the valuation of the share than you had before. So it's probably not coming down as far. So you can think of it as this cycle of expansion and contractions. And we saw 4 of those in 2025, where we saw major run-ups and major drawdowns, right? 30, 40%. So that's going to be the norm for this stock. It's the whole design. It's why after you're in it for a while, you stop panicking when the price goes down because it needs to, right? That's what makes it appealing is you need those wild blow-off tops and you need those drawdowns. And yeah, they hurt every time, right? There's no way around that as an investor.
But they will be less drawn down, as I understand it correctly, because if you're building a higher stack of Bitcoin, you're basically building a protection against that downside valuation, let's call it like that. Like it cannot go as low as it was before because the value of the Bitcoin is at a new level, basically.
Yep. You're constantly building the floor underneath the stock.
Yeah. So is that also why, or could that also be why Saylor is perhaps a bit in a rush? In a sense, well, you could say he's in a rush because he knows something about the strategic Bitcoin reserve. I think we'll skip that for this conversation. But I mean more like, well, let's say the SPR gets there, price goes up, maybe it crashes down. Like he has to protect his own path of accumulation, right? And so could that also be why he's kind of in a rush?
Absolutely. I think so. I mean, there's a lot of factors that are pushing him to move quickly. I think he's starting to see competition emerging. Right? You're going to get more demand out there for Bitcoin as these new companies start to enter the markets. And we've seen some coming in and buying a significant amount of Bitcoin, right? So there's evidence to support that they're waking up and he might not have the first mover advantage here for that much longer. So I think that he's speeding up his accumulation to try to get it. Right now, the market's still allowing him to acquire at relatively favorable prices. Right, buying in the 90,000s, given what we know about Bitcoin, is a steal. Yeah. So I think he's taking advantage of that right now, where he's going to try to get as much Bitcoin probably here. You saw it in Q4. I think you're going to see it again in Q1, where he's going to try to get as much as he can, because with the new administration coming in, it really changes the dynamics of how you expect Bitcoin to perform. It's really tough to price in what could happen when one of the major world powers starts publicly announcing that they're acquiring Bitcoin. You can't wait for that. Not for this type of strategy, not if you want to accumulate as much digital capital as possible. So I see him still being very aggressive, right? While it seems like they've used up a lot of the 21-21 plan, and for those that aren't familiar with it, they put out a plan in 2024 that said we're going to raise $21 billion using equity and $21 billion using debt. They've still got 58% of that remaining. They still haven't even used half. And it was painful in Q4 for a lot of people because the focus was equity, right? The equity side using the ATM, which is basically just MicroStrategy selling shares into the market. That one's painful, but it's the fastest way for them to accumulate, right? It's the best way that they can take advantage of moving fast. Yeah. And they do have a risk framework that they follow, which is they've got an internal range, right? And they don't publicize what their internal range is, but we could speculate that it's around 20 to 40% of the fair market value of the Bitcoin they hold on the balance sheet. That's the highest that they'll borrow. Historically, they've stayed right around 25% of the value of their Bitcoin. That's how much they borrow up to. Right now, they've got really low. So using the ATM, what that does is it buys new Bitcoin that has no corresponding debt to it.
Yes.
So that Bitcoin goes to the balance sheet and it engineers, right? You'll hear people say financial engineering. It engineers additional space for borrowing. So what I saw them doing was speeding through the equity side of the plan in order to create additional space going into 2025, where they can now shift the tool that they're using and go back to the fixed income side of the house, whether that's preferred stock or convertible bonds. And now they can stay out of the ATM market as heavily, right? You've been seeing them do a little bit, but nothing material yet. They've got $6.5 billion left on the ATM. I think that's probably going to be issued over maybe the next 3 quarters. I don't think we're probably going to see them rush through the whole thing again. But they've now created that space where they can now focus on the other side of the plan. Now they can get back to the fixed income side. So they've only used $3 billion on the fixed income side, right? So they've got $18 billion left right now that they can issue. They've already signaled to the market that they're going to do $2 billion in preferred. And we can talk about that here in just a minute. So now they're down to about $16 billion that's remaining. What's going to be unique about the preferred is, depending on how they structure it, that preferred offering is probably going to live in the equity section of the balance sheet. So that's not actually going to show as debt on the balance sheet. So it's not going to impact that leverage ratio. It's actually going to lower it even more than it is already. Right now, we're in the 17.5% range. So when I look at them, they're in a strong position now to execute on the fixed income side, because if none of the bonds that they've already issued convert in the near term, they've already got space for about $3.5 billion that they could issue right now to stay within the 25%. When they do the preferred offering, that's going to make it even higher. They're probably going to be around $5 billion that they can issue at that point. And with any help from Bitcoin, that expands drastically, right? Because it's tied to the fair value of the Bitcoin. So if Bitcoin goes up to 120,000, they create even more space that they can go out and borrow from. So they're getting into this really strong position now where in Q1, I'm expecting a lot of activity on the fixed income side for 2 reasons. One, because they've got the space and they need to keep the leverage high to keep the volatility in the equity, right? That's a core part of engineering that volatility. But 2, there's these early conversion clauses that we talk about a fair amount in those bonds, which basically says if the bond trade or if the equity trades at 130% of the conversion price for 20 days out of a 30-day period, that bond becomes eligible for conversion into equity. So if you're looking at 2025 and you subscribe to the traditional cycle theory of Bitcoin, 2025 is supposed to be the best performing year that we're going to see. The more bonds they get out in Q1 means that most of those bonds could become eligible for conversion as early as Q3, right? And if they're eligible for conversion and MicroStrategy's price performs drastically, right, making these bonds basically just trading like equity where there's really no incentive for the bondholders to keep holding them anymore, you could essentially get an almost clear ledger going into the end of 2025. Which means if there is a cycle that materializes again and Bitcoin's price pulls back, MicroStrategy might be almost entirely unleveraged by that point. And then they'll be able to re-leverage during the lower periods, raise capital, buy more Bitcoin at the depressed prices. So I do think there's urgency in the plan to execute as much as they can in Q1 before it's likely that any of these administration changes result in an impact to the US's Bitcoin strategy. So there is some timing here, and I'm sure that team, behind the scenes has modeled this out, 20 different ways already. But to me, that seems to make sense that you would act with some urgency on the fixed income side in Q1, because you might have that possibility of getting all that debt off your balance sheet going into the end of 2025, just in case the cycle does repeat, right? I still think we see a more muted cycle. It probably materializes because people believe so heavily that it's going to materialize, right? It's been so ingrained and so predictable over the last few cycles
Maybe
that I think
Spain
people will almost create it. But you're fighting now against institutional capital that's buying.
Yes.
So retail's not going to drive as much of that cycle. So maybe we see a drawdown of 30%, 40%. But I'm not so sold personally, and this is just a personal opinion, I'm not so sold that we go back to an 80% drawdown in this cycle. I think there's just too much capital that's buying at any price now, and they're holding it, right? They're not trading it. They're holding it for the long term. So I think that that's going to change the dynamics, but it trades at the margins, right? So it's going to be whatever's actively trading on the market that's going to drive the price. So I do think we'll probably see some level, but preparing for that, if your MicroStrategy, is a superpower here. So if they do this right, they could end 2025 in a really strong position to be able to execute their strategy, rebuild their debt ladder during a bear cycle, and be ready for the next bull run in 4 years and continue to build their lead in terms of the holder of digital capital.
Yeah, fascinating. I also believe, there's now perpetual buyers, especially if there will be a sovereign, a strategic reserve. So I also think, I don't think we'll see the minus 80%. Again, I agree with the minus 30. Perhaps it gets extended a little bit because I also think, and I love that you touched on that when we talked about like inflation and protection towards the future, like people seem to forget sometimes that parallel path is also happening. Right? So we are not only talking about Bitcoin, like that parallel path is the reason of existence of Bitcoin, is the accelerated debasement of fiat money and the increasing need for individuals and companies and countries to protect themselves more towards the future, right? So that is happening in a parallel way. And I do see there has to be some sort of inflection point where there are enough people, institutions that realize they need to do something. And well, if you do the research, also, by the way, as Saylor did, you will end up with Bitcoin being the best protection and savings technology towards the future. So also, we talk a lot about Bitcoin in general, but I think there's a combination, right? There's a reason why Bitcoin exists, and you have to take that into account. Like that train, as Lynn Alden says, is not stopping. One thing that really struck me with what you just said, and I had to think of when you said intelligent leverage. It's interesting when kind of like haters talk about MicroStrategy, etc. Right? They talk about, they're so over leveraged and the debt and the etc. And you said, they're trying to keep it between 20 and 40. And there's an example that Saylor uses a lot, where he says like, hey, I can borrow $2 billion backed by 500 million in Bitcoin. And as you just explained, the entire goal is to just up that stack so you can have more leverage, or maybe say just perpetual leverage. You can keep on having leverage in order to borrow more. He just says like, okay, I use 500 million in Bitcoin to borrow 2 billion. I buy 2 billion in Bitcoin. I reserve that half a billion in Bitcoin for what that loan is backed by. And I just created 1.5 billion in shareholder value, just like that, basically. And when he talks about that, it sounds so simplistic, but when you think about these accounting rules that we talked about, that's a crazy business model. Like that is insane, right?
Yeah, and it's important to note that they're not backing these by anything. Right. These are non-recourse.
No, he talks about it like
yeah,
that.
But he talks about
the word
basically saying that the organization has so much value beyond the borrowings, right? And every time that they're accumulating more Bitcoin, their position just keeps getting stronger and stronger. So yeah, he's basically borrowing a trivial amount relative to the assets that they're holding.
Yes,
right. Which makes it just such a good play. What they're basically doing is they get to buy Bitcoin now and they get to pay for it with equity later, right? That's what they're doing.
Which is of more value because their stack is higher.
Well, exactly. So, when they're setting these conversion prices, it's been interesting to watch that grow over time, when they went from being in the 30% conversion premium, and then on this latest offering, they got 55% on the conversion premium, right? That premium's growing. So it's becoming more accretive to the shareholders in terms of the Bitcoin per share and the Bitcoin yield each time they're doing these. And the conditions are becoming so favorable that they're getting 0% on $3 billion. I mean, that's a really incredible demand for someone to give you $3 billion at 0% coupon payments, right? That's not normal, but that can only be because of the performance that you're getting in the equity. And they know that there's value in that call option of that debt. And that's what's going to make the preferreds very interesting when they issue these. And I don't know whether they'll do that sooner or later. I kind of thought because they had 5 million shares available right now, that they might do the preferred offering before the shareholder vote. I'm starting to think that maybe they're going to wait and do it after the shareholder vote, although I don't think that they necessarily need the increased shares yet. I think those shares are largely to accommodate stock splits in the future, right?
Exactly.
People are freaking out about it, but it's really about stock splits in the future. It's not like they're opening up,
they're not going
10
to
billion
do it
share
in one
ATM.
go. Yeah,
right?
exactly.
Yeah, that's not what they're doing. But the preferred is going to be very interesting because preferred is essentially going to be an even further step down volatility product from what the convertible bonds are. So if you think about how they're going to do that, the structure of that preferred stock is going to matter a lot in terms of how it trades from a volatility perspective. So if you're trying to get to a volatility of 30, which is half of Bitcoin, right? If you're trying to get to a volatility of 30, you need to engineer the terms of that offering to be conducive to that. It means that you're trying to make this product act and trade as fixed income for a long period of time. And there's some very important things people need to pay attention to when we're watching for the terms that are going to come out on the preferred stock, mainly that they need to have this preferred stock fully aligned to being equity, right? Where really the only outcome for that preferred stock is that it converts into equity. So they've said that they're issuing perpetual preferred stock. What perpetual means is that there's no end date, right? There's no maturity date, right? There's no forced redemption date. It's essentially perpetual in nature. Now, that doesn't mean it's going to exist forever, right? Because there will be other terms in there that allow either the holder or the issuer, which will be MicroStrategy, to force that conversion into common stock. So what we're going to be watching for is how they structure those terms, right? So the first step is make it perpetual. Don't give it an end date. That's one. The second thing you got to watch for is there can be no clauses that can possibly result in a cash redemption of the preferred stock. If you have any type of cash redemption for the preferred stock, now it's a liability to your business. So now it has to live in the liability section of your balance sheet. And that's very important because that takes away from the leverage you're able to deploy for the convertible bonds. So I'm looking for them to have no cash conversion clauses in there whatsoever. I think it'll be very similar in structure from a convertible standpoint, where you'll probably see something similar like the 130% of the conversion price. I think you'll see a similar term in these preferreds, but what's going to be really interesting is they need to create this long time frame of this product acting as fixed income. So while a lot of people are cheering for maybe they'll get 0% on the preferred, they're not going to get 0% on the preferred, right? I'll make that guess right now. I actually think it's going to be a fairly strong market rate, maybe something in the 7% range from a dividend perspective on the preferred. So what they're going to do is probably get a really massive premium for that conversion. So say the stock was trading at $350 a share, I would guess that that conversion premium might actually be like 150%, right? Which would put that at $875 would be the conversion price. And then 130% from that would get you to what the early conversion trigger is. I don't know exactly what that pans out to. 1,034, 1,137, something in that range. Yeah, a little over 1,100. So that strike price is way out there, right? Stock has a lot of room to move. And that's important because what they're not going to want is that equity feature to kick in too early on this product. They want people to want to hold these for the dividend. Now, the dividend is another area that they need to be very intentional in how they word it, because if it's a guaranteed dividend, that's a liability, right? You're guaranteeing cash payment of something. If it's a discretionary dividend, that's different, right? So I'm expecting them to have a discretionary dividend, probably in the 7 to 8% range that's out there. They'll collect the money at 150% premium, which is highly accretive to Bitcoin per share, right? It'll have a fixed number of shares associated with it. That's also very important to keeping it as equity, is that that conversion needs to be in a fixed amount of shares that's known at the beginning. And I think that you'll probably see this in existence where MicroStrategy won't be able to force a conversion for maybe 5 years, right? They shortened the window on the convertible bonds. I think they got it down to 2 years on the last offering, was kind of their no-call period where MicroStrategy couldn't call those bonds. On this one, I think it's going to have to go longer because, again, you want people buying it as a fixed income product where they're holding it for that dividend. That's why they're holding that product. So you want it to trade like it's a fixed income product. So they're engineering lower volatility on this offering. And then the other thing is where it stands in like a liquidation scenario. So it's got to sit below the debt, right? So that it can be equity, but it'll be above the common stock. So that'll be another important thing to watch for. So the way that they build this out is going to be very interesting to see, right? I'm expecting it's probably still going to come out. Maybe it'll be priced at $1,000 for the preferred shares, which would be, 2 million shares of preferred that get issued. They can change that price, but I think that they're targeting institutional buyers with these. I think that what they really want is going to be these insurance companies, these endowments, right? Those types of buyers to come and buy the preferred stock because they want that fixed income exposure. Watching this all play out is going to be a pretty interesting revelation because it's going to set the market for everybody else. And setting the market for everybody else is a critical thing to do when you're the leader like MicroStrategy, right? You need to give them that blueprint that allows them to see what's possible here, right? How should we look at preferred stock for our company? Now, one thing that a lot of people are going to catch on to when they see this is they're going to go, well, that's great. But if you said it's 7 to 8% interest, that means that they've got to pay out $140 million to $160 million a year on dividend payments. And that's well beyond what the company cash flows. And that's going to be an interesting thing to watch because it means that that Bitcoin per share increase isn't quite as black and white as we've gotten accustomed to with these other offerings, right? I mean, there's nuances in terms of, if MicroStrategy calls a convertible bond early, they actually owe more shares than what you see in the initial offering, right? There's some nuance there too, but it's minimal. These, it's different because you're essentially going to have to try to estimate out how much equity are they going to have to sell to raise the capital to pay the dividends, right? And that math isn't quite as black and white because you're trying to raise capital at future prices on your equity, right? If they have to raise the capital at $300 a share versus $1,000 a share, that's a wildly different number of shares that they're going to put outstanding in order to service the dividend. So we're going to have to watch that a little bit to see how they message that math out to the market. But that's kind of the important part of getting that massive premium on the preferred is now you've got room where you can issue equity and still keep it more accretive than the convertible bonds are. So those are some of the things that I'm watching for as they structure these out. And I've been trying to model, how would I structure a preferred offering to keep it as equity so I don't impact my leverage ratio and give myself enough room where if I need to use equity as a way to pay the dividend, how do I allow for that to still keep this as a massively accretive transaction for my shareholders?
What I'm thinking is that it's interesting how they are trying to offer something in, I don't want to say short term, but you have to offer something in the now. But their entire thesis is built upon a very long term outlook, which I think, the general haters or critics don't really see and thus understand why they are doing it, right? So Saylor says, by my calculation or by his calculations, Bitcoin's CAGR will be 29% average over the next 21 years. And that, as I've come to understand it, is basically the underlying thesis as to why he's doing it, right? So it's an interesting dynamic between watching the current financially engineered, products that they're offering, but at the same time also understanding, what is the end goal, and also taking into account these, the possible continuation of the cycles where eventually the price goes down. I mean, they know that has been the history of Bitcoin, and I find it so fascinating that just as with Bitcoin, it's so hard for people to, just take someone's thesis and then kind of like run with that or judge that, right? Like people are projecting their own understanding of Bitcoin or financial markets or dividends or productive assets and stuff like that. I find it really interesting to see that a lot of haters, and they have very bad blog posts that you shared a bit today, that, they just stick with kind of like overly simplistic arguments, perhaps. And they don't really take into account, hey, there's this guy who has a 21-year thesis, and that is what he's playing. So let's look at it like that. How do you look at that? And do you find that difficult as well? Like, who can predict 21 years?
It is, yeah. I mean, for most people, we live in a very short-term nature when we're thinking about possibilities, right? Our time frames have become very narrow, and part of that's probably, social media and the way that we're fed content. And it's the reason why people are so upset with MicroStrategy when it doesn't move is because we're expecting massive movements in 1 month timeframes, right? Whereas when you embark on a strategy like this as a corporation, you're playing the strategy out over decades, right? So the evolution we see at the beginning isn't going to be what it looks like, probably even in 5 years from now. This is when you put out a KPI for your company, what you're really doing is you're trying to align the market and your management to the direction you're trying to go in the near and moderate term, right? You're guiding towards the next outcome of your strategy. And so we may see an evolution of the KPIs that they're focusing on in 5 years. It might be different. Maybe it's not Bitcoin yield anymore. There might be something that's better for shareholders that they'll shift and focus on at that point. But right now, they want their management team focused on effectively and efficiently accumulating as much Bitcoin as they possibly can for the next 5 years to set that organization up for the next iteration of what they're going to be in their strategy, right? These are constant transformations. If you're a company and you stay idle and you stick with one strategy and you never evolve that strategy, eventually somebody else innovates you away, right? That's just what happens. You've got to continue to be thinking about the future. And Saylor in all of his messaging has shown that MicroStrategy is aligning itself with a long-term vision that's going to set them up for continued success well into the future, right? That guy thinks in terms of 1,000 years, right? He doesn't think even about 10 or 20 years. He likes to talk about the deep future and the value you're bringing to humanity over that time period. So he's a pretty unique leader in that sense. And I think he's doing everyone a great service by trying to communicate out to people that, Bitcoin's not a now asset. Bitcoin's a forever asset, right? This is something that we're going to constantly be building. It's this next evolution in digital capital for the world. And he views that as a very, very deep guiding mission for himself and for the company that he controls. And when you look at it through that lens, it helps you to be a little more comfortable in the way that they're executing here, knowing that this isn't just some knee-jerk strategy that's happening, right? That's a guy that's put in the effort to understand what Bitcoin is, what it means to humanity, what it's going to mean for his own company, and how he can generate the value for his shareholders over an extended period of time, right? Not this year, not next year. He's looking 10 years, 20 years, 30 years. And I bet they have a view internally of what that future looks like. And obviously, they're going to be getting far more calls discussing all the developments in Bitcoin well beyond what you or I are going to see. But I think that they see how bright the future is here, and they want to be one of the largest holders of digital capital so that they're ready and in position to take advantage of what that future looks like.
All right, maybe to wrap it up, let's see if we could have like some short answers to my final questions.
Perfect.
How much do you think you can reasonably acquire this year? I mean, we've talked about, the competitors, etc. I'm not sure where we are exactly at time of recording, but yeah, he's in a rush. What are your thoughts there?
Yeah, so he's got 450,000 as of this morning, right? That was with their latest buy. My estimate shows them getting to about another 210,000 this year, which is a significant amount of Bitcoin. But when I look at what they've got available to them left in the 21-21 plan, I think that they're going to work pretty hard to exhaust that plan in 2024 or in 2025 so that they can announce what the next iteration of that plan is probably in Q4 of this year. So I think that with the capital they have available in those plans and with a little help from Bitcoin here, I think they'll get to another 210,000 this year is my guess.
Yeah. And we also talked before this conversation about the end goal. I call it like Saylor wants to become like the world's first Bitcoin bank. How long do you think that'll take? Like how much Bitcoin do you need in order to do that? And perhaps even more, like when would the market even be ready for something like that?
Yeah, I think it's going to take some time, right? But when I say time, I'm not talking decades. I'm talking 5 years probably before we start to see more financial institutions getting ingrained in Bitcoin, and we're going to start seeing what those financial products look like. So if I'm MicroStrategy right now, for 2025, 2026, 2027, I'm focusing on accumulation. And they're probably targeting getting to 1 million Bitcoin, right? And they might be able to get there. I think as the adoption picks up, it keeps getting harder and harder to get there. But that's a significant amount of capital for an entity to control. And I think it puts them in a great position to become this digital capital bank to the world. And I don't know exactly what those products are going to look like yet. I got to spend some time, thinking about the evolution of that. But I think it's going to be a very exciting future for a company like MicroStrategy. And I think that they're going to have a ton of options in terms of how they reinvent themselves over the next 5 to 10 years.
Yeah. Do you think there will be a moment where MicroStrategy is like too big to fail? Like, are there any risks that you see this year in like their approach and their current strategy?
Yeah, I don't know about the too big to fail side of things, right? I mean, it becomes very difficult to fail with the scale that they've had, particularly if over time, once they start evolving out of this leveraged acquisition strategy, if they evolve out of this leveraged acquisition strategy, and you start seeing the leverage of the company come down, they just get stronger and stronger because they have this massive war chest of capital that can absorb huge fluctuations in value with no risk to the organization overall, right? There's like that article I put out today that was talking about the financial debt covenants that they were going to trip, right? Those don't exist. So, it's just a silly article for someone to even put out because these bonds are non-recourse. There's no cash flow triggers tied to them. There's no collateral where you have any loan to value provisions on it. The same will be with the preferred stock. So they're not putting themselves in a position of weakness, right? And just with the Bitcoin that they're holding, because they only tend to lever up to 25, the reason for the 40% upper range is that allows them to absorb volatility in Bitcoin's price, right? But they're probably only actively going up to 25%, which means they can sustain a huge drawdown in Bitcoin, and it's really not going to impact them, right? It'll be painful for the equity, of course, but it's not an existential threat to the underlying business, right? For that, you're really looking at very point in time maturity risk, right? At the exact time that a bond's maturing, if you get a black swan event, it's not going to sink MicroStrategy, right? The risk is to the common stockholders, right? That much should be known by now, where they're going to sell equity to pay off that bond if they need to. So that would become a dilutive event if that happened. Black swan, direct point maturity. But that's why they've got these early conversion triggers and they're pushing that ladder out into the future over time. And eventually, if they evolve and they become this bank, their strategy may change and they may be out of the leverage side of things. And now they're just this holder of this massive war chest of digital capital. They're in an incredible position of strength to innovate and do whatever they want.
Well, black swan is basically with any investment. Right?
Exactly. So, it is.
Yeah.
Nothing's without risks, right? I mean, I'm not going to pretend that, but yeah.
Yeah. On the other side, maybe a fun thought, let's say, because there's so much volatility, you mentioned before, there's a lot of short sellers, people who are like super short on the stock. Could we get like, if you think about, we get like a GameStop-esque squeeze for MicroStrategy, which kind of like leads to trading getting halted while Bitcoin blasts towards the stratosphere. Like, that would be the best day ever. Could that ever happen, you think, when kind of like the traditional finance part grinds to a halt and Bitcoin is just like, see ya?
Yeah, I think it's going to be eventually you get someone caught short on Bitcoin directly versus MicroStrategy, right? MicroStrategy is a little unique because while it looks like they have a lot of short interest, it's pretty much all tied, probably 75% of the short interest you see is hedges on the convertible bonds. So there's no squeeze there, right? You can squeeze that price to
perfectly
infinity.
Logical, you mean also these shorts.
But they're fully hedged, right? So you're not, they don't ever have to close that short. So, there's no like short squeeze that comes out of that. So I don't look for a lot of short squeezes on MicroStrategy. I think you'll get a ton of gamma squeezes on MicroStrategy. So that'll be a different thing.
Up and down.
Up and down. Yep.
Yeah.
But I actually think that eventually you'll get someone that gets too comfortable and decides to take some big short position on Bitcoin itself. And maybe it's through ETFs. I don't know what it'll be through, but there's no stopping a short squeeze in Bitcoin, right? There's no circuit breakers there. No trading desk is coming to save you, right? You're in trouble. So while I think most people now stay out of positioning themselves that way because of that risk, I think it also does improve the position of a lot of these equities that are putting Bitcoin on the balance sheet, because it makes traders have to think about whether they really want to short your business, because now you've got this asset that they don't have any control over. And if that starts going crazy and they're short against your equity, they're in a world of hurt. Because while your equity can jump and trigger these circuit breakers, Bitcoin can keep going. So every time that those circuit breakers flip back on, it's going to be more painful for you. So it's really risky to short businesses that have this as a part of their strategy. So I think that you'll probably actually see a little less shorting on these types of equities than you would see on traditional ones.
That's a good point, because you also really have to understand Bitcoin in order to substantiate the argument to short. And if you don't understand Bitcoin enough, then the short is a very bad idea.
Yep.
All right, man. I think this was a great conversation and an outlook for 2025. I want to ask you my last question, because I ask everyone the same question, which is, what is a core belief that you will never let go?
Core belief that I'll never let go. I put a huge amount of importance on allowing yourself to think differently than everybody else's. And it took me a long time to get there. And it took me evaluating a lot of my own beliefs to get there, both personal beliefs and not just even talking about Bitcoin. But I think one of the biggest strengths you can carry forward as an individual is that ability to allow yourself to think freely and think differently from what the rest of people are doing. And it's the only way that you're going to create different outcomes than everybody else gets. So I believe wholeheartedly that you need to free your mind and let yourself think differently.
I love that, man. That ties into going all in on Bitcoin, I think. So
absolutely.
Thank you so much for sharing that. Thank you so much for your time. I hope this is valuable to people. And yeah, man, let's do it again sometime. Thank you.
Absolutely. Thanks, Bram.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for our next episode.